yesterday, we had that inflation number. We had it go from 21.82% to 21.91%. And it was also attributed to this issue of cash crunch. But let me not get ahead of myself. We have Mr. Paul Alaje, senior economist and partner SPM Professionals, joining us virtually from the United Arab Emirates to tell us how much this has contributed to this. Mr. Alaje, good morning and thank you for your time. So I know you by now you're used to the new inflation number. How much of it can we attribute to the issue of cash crunch?
Well, thank you so very much for having me. A lot must be attributed to the cash crunch, whether we like it or not. The truth is, people find it more difficult to have access to money. And if you don't have access to money, it is in fact more difficult for you to access goods. When someone wants to buy, say, bonds, like your correspondent mentioned, or want to buy anything, and such person that wants to buy has been told that without providing cash, which is not available, you cannot have access to it. So what option does he have? If we go to the nearby POS, the POS is saying that for you to access 5,000, you need to pay additional 2,000. If he wants to use it to buy, say, bottled water or whatever that costs 5,000, the real price of that bottled water is 7,000. As a result, at least 2,000 naira has been added to the cost. So the person that spends 7,000 naira will also pass it to anything he's selling or his service and so on and so forth. Before you know it, it may go around the economy. So I use this as an example. Also recall that in the month of February, Nigerians spend quality man-hour time queuing at the filling station because there is relative scarcity of PMS at that particular point in time. So now get to filling station, I buy fuel, they tell you that the POS is not working. And what I experienced in February in Nigeria, it was that I had to then go to POS, collect cash, because I want to put fuel in my vehicle. The implication is that I am now paying more for what I actually wanted to buy. Then we should also talk about the devastating, the disturbing, and the very embarrassing network that most banks have in Nigeria. It's really very, very disturbing, to say the least.
And then there's now the projection that in the first quarter, we're going to have a contraction of the GDP. I guess this shouldn't come as a surprise with all of this that we have experienced, which you have listed.
Well, I spoke with your colleague on this show last year, and I said that if Nigeria don't take care, we may be going into a recession. You see, people don't understand why, in spite of central bank's directive, and the Supreme Court, one would say the almighty Supreme Court has spoken. One would say the almighty President Buhari, the central bank governor has spoken. What many don't understand is that when you withdraw 1,000 naira, the 1,000 naira that Paul had and gave to Ini is what was gave to Kelly. You know, if I say I want to buy your bag for 1,000 naira, that same note is what you would give to Kelly for transport. That same note is what Kelly will give to bond seller. That same note is what bond seller will give to pure water, and it keeps going on. Just one note. If you withdraw it from the economy, then it becomes a challenge for me to transact with you, for you to transact with your colleague Kelly, for Kelly to, and it goes on and on and on and on like that. Especially in an economy when other platforms, talk about digital platform or electronic platform, are not optimum. The implication is that velocity of money that should induce growth has been hampered, has been reduced drastically. Therefore, if we don't now buy, it's going to reduce aggregate output. When aggregate output reduces, then you will have slow economic growth. And I will not be surprised when the first quarter GDP report comes out. It is certainly be lower than last quarter GDP numbers. And I have said on your show before that if the National Bureau of Statistics says that the inflation is not higher in the month of February, then we should question the authority. Now, with the number we've seen, it's a minor, say reduced, growth. It's a reduced rate of inflation. Inflation is high, I beg your pardon, even though by a marginal number. But that increase is still there. The target for inflation by central bank is between 6 to 9%. So talking about this cash crunch and the implication, A number of persons have asked that what must be done, and why are they still experiencing, like the person being interviewed there said, in spite of central bank, in spite of Supreme Court, in spite of President Buhari, politicians saying cash, that's 1,000 withdrawal. Central bank mentioned that over 22 trillion naira has been withdrawn from the economy. So you can now imagine how many number of people that we have direct impact on. That does not mean this policy is wrong. I keep saying that. The alternative platform that we should be using, the alternative platform that should be available is not functioning. Again, the level of education for our people is still very low. Unlike other environments where level of education is relatively high, and alternative platforms are working. They are not yet in Nigeria, and in the places where they are, the functionality is low. So we have three situations. The first situation is the situation of ceteris paribus, other things being equal. This issue, this pressure on Naira, and we may not also go into a contract growth by the end of the quarter if the situation remains as ceteris paribus, that is, other things being equal. If central bank will actually release the withdrawn money, significant part to the economy, yes, inflation will spike, as you have read even in other markets, but the ease of accessing a commodity will reduce. What does that mean? That also means that you are going to have improved growth rate. But when that does not happen, and it's a situation where people can spend their old notes, but banks are dispensing to them, they are not receiving it back, they need to spike some concerns within the economy. Then you see people losing man-hour again, you see performance also reducing, and in the long run, you might only see growth in the medium term, not in the short term, in the first case of other things, other things being equal. The worst case scenario you may see is the mutatis mutandis. That is, what needs to be changed must be changed. When will it change? If the old notes that have been withdrawn to the economy does not come back, or if the money supply of the new notes, which I think is actually the issue, is not returned back to the economy, then wait for a recession by Q3 or Q4 2023, which means the president-elect we first need to face the reality of the economic crunch. There is no policy you do at that time that will change, because that policy will take minimum of 6 months. That's if the policy is really super fast. But if the policy is also on politics and so on and so forth, I'm afraid we might need to wait for another 1 year. Recall that President Buhari, when he became president of Nigeria, Christine Lagarde of the IMF as at that time came to the country. And as against the advice economists in Nigeria we gave to government, they said the Nigeria economy was fine. And we said, well, it's our country. We live here. We live in Nigeria. If the government don't follow some things squarely because of the nature of our market, which is different from French market, which is different from what is happening in the United Kingdom, if we don't follow, their economy will go into recession. Nigeria economy went into a recession in 2016.
We certainly hope it doesn't.
Because some of the dynamics of our economy is relatively different from what is happening from the rest of the world. I hope that those in authority will avoid the last case scenario and make what should change. What should change is increase money supply. It's not important whether it's the old note or the new note. That money supply we have right now is evident that it is not sufficient for our people, the level of education we have in Nigeria, and more importantly, the other channels, electronic channel, is not functional.
All right, Mr.
What I think the correspondent.
All right, Mr. Laje. All right, Mr. Laje. Thank you so much. Thank you so much. That's kind of scary to have the new administration begin on a recession note, and we do hope that will not be the case. But thank you so much for making the picture clear for us, Mr. Paul Alaje,
Thank you so much for having me.
Senior Economist and Partner with SPM Professionals.